Okay, so we're just going to get started. Welcome everyone, and thank you for joining us this morning for our webinar on managing your cash flow. My name is Su-Ling Ching, and I'm honored to be the President and CEO of the Ottawa Board of Trade. We have quickly turned our events schedule into a virtual event schedule. And I want to say thank you to Lynn Ladd from our team for leading this initiative, along with many members who have been so supportive during this time in helping us to continue to offer value to our members. I want to start by saying thank you to some of our sponsors for this event. So the Ottawa Citizen is a community partner of the Ottawa Board of Trade, and we're very grateful to them for their support throughout the year. Enbridge Gas is a supporter of our events, and so thank you to Enbridge Gas, and Media Mall as well has helped us tremendously on getting up to speed on our virtual events. Of course, today we're very grateful to Welch Capital Partners and our keynote speaker, Candace Enman, who is an expert at cash flow management and who we will be introducing in a few minutes. I just want to say we're all sort of new to this, so we ask for your indulgence and we thank you for your support. Just a few things. Everybody should be on mute right now. We have been asking people to come in a few minutes early so we can get started right at the time at 11 o'clock. But if you look at the top of your screen, you can choose I think gallery or speaker view, and you can also, when we get to the Q&A at the end, use your raise hand buttons, and then we will manage the Q&A as well. I just want to share a little bit about what's going on with the Board of Trade. Like many of you, we're working virtually, our team, and our team has adapted very well. Thankfully, we were technologically set up to do this so that we didn't lose a lot of time. We've spent the last, I guess it's almost 3 weeks now, very focused on staying connected to our members, trying to understand the various issues that they are facing, and pulling that information forward to our partners at the Ontario and the Canadian Chamber to make sure that the decision makers have the information that's most important in the programs that they're rolling out. Conversely, we have been making every attempt to disseminate the information that's coming out of the government in terms of support and programs, and getting that out to our members as well as trying to continue to add value through benefits to our members. And we're looking at this really in 2 stages, is that what can we be doing now while we're still in crisis, and then starting to design a strategy for our business community for when we can look at recovery. Just a few messages that I would like to share with you from the many tables that we're involved in on your behalf. The #1 strategy for us in terms of economic recovery is to follow the advice of our public health officials to stay home and to have only small groups of 5, to be washing your hands, obviously not touching your face, which is easy to see when you're doing it when you're on video chat all the time. So we really encourage you to follow and encourage others to follow the advice of our public health officials so that we can get through this as quickly as possible. The second thing is that along with the city and many of our other economic partners in Ottawa, encouraging everyone to take a look at where they can buy local to continue to support our local-based businesses as we get through this crisis. And then I want to acknowledge all of you for being on this call today, because the third thing is staying engaged with the members of your business community. Physical distancing is now the term as opposed to social distancing, because it's really important for us to stay engaged, support one another however possible, and that's also very beneficial for our own mental health, and as well as looking for innovative ways to do business. I will share with you too that we're going to be launching an initiative. We want to start collecting stories of our local businesses that have been innovative during this time so that we can share those with others, acknowledge and recognize you, as well as inspire others to stay focused on how they can look at doing business in this current economy. So without further ado, I would like to introduce you to our keynote speaker today. And I have a beautiful bio here, and I am going to read it because this is, as many of you would know, Candace, because I know that she's also a local Business Leader Award, a recipient. I was there the night that you were awarded and very pleased to be. But also Welch is as a leader in our membership in terms of supporting our business community as a whole. So Candace is the president of Welch Capital Partners, where she runs a successful M&A capital, valuation, virtual CFO, and advisory services practice that helps business owners think and act strategically in their companies, assisting owners in managing their growth objectives, preparing their business for an upcoming transition, and buying and selling companies. She is focused on improving the value in small and medium-sized enterprises by ensuring their profits are sustainable and transferable. Candace has more than 20 years of financial and management experience. After obtaining her CPA CA designation in '99, she spent 10 years in senior finance and management roles, which allowed her to go beyond keeping score. She's played key roles in all aspects of growing a business, including new system implementations, evaluation of new business opportunities, implementing human resource practices and policies, and providing sound advice to business owners. She believes that successful businesses do more than keep score. They build value from the ground up, and she brings that philosophy to all of her engagements. We're so pleased to have you here today, Candace. Thank you for being here.
Thank you. Okay, I guess it's over to me. Let me know if you guys can see my screen.
I can.
Mm-hmm. Okay. Okay, so let me, just gonna click on something. Sorry, I'm just monitoring my two screens. Okay. And okay, I'm trying to minimize everyone. So good morning, everyone, and thank you, Su-Ling and Lynn and the Ottawa Board of Trade for really giving me this opportunity to present today. It definitely has been a crazy few weeks with the days bleeding into nights as we work closely with our clients to help navigate through this COVID-19 crisis, stay on top of all the new government measures, which hasn't been easy, and to continue to run our business as well. For those of you who don't know Welch Capital Partners, we are a boutique advisory firm that works with owners and their company stakeholders to help them understand, maximize, and capture value. And as Su-Ling said, we do this through our core service offerings of valuation, virtual CFO work, where we actually do a lot of cash flow management work, advisory, capital, and mergers and acquisitions. So today we find ourselves in an unprecedented time. Not only do we have a health crisis, but we are trying to mitigate the magnitude of an economic crisis. Realistically, some companies will not make it while others will thrive as we'll be able to capitalize on new opportunities. And for the majority of business owners, they are no doubt in survivor mode, trying to do everything they can so that they can pick up the pieces after COVID-19. A company's ability to function will in large part depend on the industry they are in, but also their ability to plan and then to act quickly. Their operations and financial health prior to COVID-19, specifically whether they had cash reserves, they were profitable, or whether they could easily adapt to shifts in the customer, market, supply chain, and technology demands will also play a large factor, I think, in their survival. So my hope today is really threefold. And the first is to really instill in everyone here that you need a plan, likely more so than ever given the uncertainty that we're facing in the market. Secondly, to provide you with some insight and some practical measures that you can look at as part of that plan. And finally, to offer you a long-term perspective on how collectively we can manage through this and hopefully thrive in the end. So as I mentioned, businesses need a plan more so now than ever. And I think the plan really has two objectives. So first, I want businesses to understand and document the impact that COVID-19 is having on their companies. And I think this is the critical first step, as it substantiates the financial impact to then allow you to make proactive decisions to protect your company. It's also a critical step if you want to take advantage of some of the government's subsidies that were announced. So in order to understand and document that impact, businesses need to have a budget or projections in place and really think about all the cash flows and inflows, outflows and inflows that they're experiencing. And we typically ask clients and companies to think about this as a mid to long-term impact. And I know in talking to several of the banks, they're saying to think of it as a 6-month focus. So when you're looking at your financial projections or when you're thinking of your cash flows, I mean, you're going to really start looking, I guess, at your profit and loss. And I think that's where most business owners would gravitate towards. So you're going to start with your revenues. And when you're thinking about the revenues that your company is generating, you likely want to do some worst expected or best case scenario analysis on what you think that would mean. And I completely understand that we have businesses in our community that have completely had to shut down. We have others that are still functioning. We have others that are functioning at maybe 50% capacity. So when you're looking at your revenues, there's multiple ways that you can go about looking at and trying to forecast. You can look at what your pipeline was. You can do a percentage of revenue, but you're really trying to understand, you know, what money do I still have coming in during this period? The next thing you're going to take a look at are your expenses, and there's two types of expenses. There's your variable cost, and variable costs tend to fluctuate with your demand in sales. So if you think of items such as, I mean, cost of goods sold, so like your inventory items, I mean, that's generally the best one, but commissions, travel, advertising, they're really your discretionary spend. And then you have your fixed cost, and these costs are static in nature. So rent, insurance, wages, loan payments. I think it's also important for businesses to understand what that break-even point is. So how much revenue do you need coming in so that you can cover off all your cost? While most business owners will focus on just the profit and loss, I think as an accountant, we tend to try to educate our clients to focus also on the balance sheet and obviously the cash flow. It's nice to know how profitable a company is, but the strength of a company is really shown in the balance sheet of that business. And you're going to find obviously additional cost on the balance sheet that you wouldn't necessarily pick up if you were just looking at your profit and loss. And a good example of that are your loan payments. Once you have an understanding of what the COVID-19 impact will be on your business and you're thinking about those financial projections, next you're going to determine how often or what is the breakdown of that financial reporting that you need. So do you need to be looking at cash flow on a daily, weekly, or monthly basis? And many business owners will look at it either weekly or on a monthly basis. Once you know the impact on your business, I think the next thing really is to create that action plan. So for most companies, their decisions need to be bold and they need to be made quickly. I always say now is not the time to be paralyzed, nor is it the time to make a series of small decisions that you may find yourself really in a reactionary mode down the road, right? So you made small decisions, and then down the road you need to continue to make more and more decisions. So we're really looking for that large impact today. And I say businesses should be thinking of a series of short-term tactics so that they're able to save the company in the long term. I think that is really the key. We're in this for the long term. We want all of our businesses to be sustainable and to survive COVID-19. So we're going to do what we can in order to make sure that we have a business to come back to. And I really like this quote. It was from an article that I read by Sequoia Capital, but this one particular part, those who survive are not the strongest or the most intelligent, but the most adaptable to change. Mm-hmm. And we are changing at lightning speed right now. And I think the companies that are able to make that change quickly, they will have a much greater chance of success. So let's now take a look at some of the best practices with respect to cash flow strategies, and specifically some tactics that you may be able to deploy in a time of crisis. So managing cash in a crisis mode, as I said, like when we're thinking of that plan, the first step is really to have a forecast. And you want to have a forecast or a budget in place because you need to know your runway. And I constantly say you need a longer term view because we're hoping that this isn't going to last necessarily 6 months, but it's going to have impact on your business, and you need to understand what that impact is going to be. Secondly, you're going to look at curtailing spending, and we specifically talk about spending when we're in a crisis mode because there's a lot of uncertainty around revenue. And the expenses are known. So anyone can take a look at their income statement and go down and start identifying what are those discretionary costs, what are going to be the biggest impacts on my profit and loss, what can I do without for now. Whereas revenue, it's definitely a lot harder to predict for, I'm gonna say, the majority of business, obviously not in all cases. The next thing you're going to look at is access to capital. And there's really 3 things there. So there's traditional capital, and by traditional, I mean leveraging your financial institutions, so traditional loans, lines of credits, credit cards. And then you can look at alternative capital, which I'll get into. And obviously, this is a very different crisis rather than just a straight recession that we're in, and we have access to a stimulus package, and you're going to want to make sure that your company is accessing that stimulus. So because new revenue may be harder to come by and collections may be slower in times like this, businesses really need to understand the financial and operational risk of their key customers and supplier networks in order to manage their cash flow expectations, which is why in this situation that we're in with COVID-19, I think the number one thing that all companies can be doing is really calling their customers to understand what the impact of COVID-19 is on their business. And really you're doing that twofold. One, you're doing it because you want to maintain really good relationships with your customers. You want to get a sense of their ability to pay if they are sitting in your accounts receivable right now, and also their ability to keep ordering new product or potentially getting new services and stuff from your business. So it's going to help you in the long run understand and work on those projections that you need for your business. For companies that are typically service or construction who have work in progress, I'm going to recommend that you also take a look at that, because sometimes it's often overlooked. We just look at the invoices that we have sent out, but work in progress is just that. It's work that is to be billed, and I would be asking some of my customers, especially if there's contractual terms to that work in progress, if you can bill on an accelerated level. So you want to make sure that you're on top of all your invoicing. Many companies are considering offering incentives to some of their customers, early payment discounts. They're also looking at putting payment plans in place. So maybe your customer can't pay today, but trying to get, an indication whether they can pay in the next 2 or 3 months based on the situation that they're in. Again, you need to know this information because it's going to impact your cash flow analysis. I also think it's a great time for companies to be thinking, is there something else that I can be doing? Is there another revenue stream that I can be accessing? And we have a lot of great success stories in Ottawa, and I've included Barton's Bioscience here and Thari, who are able to pivot their companies to help in this COVID-19 crisis and have access to obviously new revenue streams. And you see that even with some of the restaurants who weren't previously using delivery services, for example, and now they are. So what can you do in order to survive? With respect to best practices, again, reviewing payment terms. I know we've saved lots of clients who were providing services and weren't requesting payment up front, deposits. So again, as a best practice moving forward, I would implore you guys to be thinking about things that you guys can do to get cash in your door early. I know businesses that do not perform any work without asking for full payment up front, so it's always an option. Of course, you want to make it convenient for your customers to pay. It's hard for businesses now to do checks, so you want them to be able to pay by credit card, wire, ACH. As you're getting new work in, you obviously want to make sure that you're invoicing immediately and make sure that you're going through your collections. And like I said, doing those calls, you're going to focus on your big accounts first, the ones, again, that are going to have the most impact. The same goes for key suppliers. You want to make sure that you're in contact with them, calling them, making sure that there's going to be no interruption to your supply chain. I have an incoming call. I apologize for that. And just make sure that you have inventory levels and that you're not going to have any disruption at all. When you're talking about inventory, do make sure that you have stock in place. If you have excess stock, is it possible to return it to a supplier? Can you look at selling it? So just think about ways to get the cash in. With key suppliers as well, I'd be trying to negotiate your terms, looking at potentially new pricing, extending contracts for better pricing, making partial payments, because a lot of suppliers, they will require payment before they release goods, for example. So you want to make sure that you're talking to them. And I always say that you want to prioritize payments to your key suppliers versus paying anyone else. With respect to your other vendors, the same thing really applies, the same rule applies. You want to make sure that you have good relationships with them, that you're trying to negotiate payables. We often get a lot of questions around rent because it is one of those fixed costs and, generally makes up a large percentage of total cost as compared to revenue. And we're actually seeing landlords be open to discussion. So the key here is if you're not calling, if you're not asking, then you're never going to know if they're willing to negotiate. So I think it's important to have those conversations. We've seen clients who are able to defer their rent for 30 to 90 days, depending on the situation. So I think it's, again, you need to have that call. Where appropriate, you're going to look at slashing expenses. Like I said, there's a lot of uncertainty with respect to revenues, but your expenses are known. So there's workforce adjustments. Many companies have put hiring freezes in place. If they had capital projects, they've deferred them. So I had a client who was looking at doing an expansion, and we had to put that on hold. Ultimately, you're going to look at trying to right-size the organization for the situation that we're in today. And you're going to be looking at eliminating all discretionary spending. I like what Suling said, that she said it was physical distancing, no longer social distancing. So I actually hadn't heard that term. But I mean, naturally, there's certain things that we can't do anymore. So there's automatically a decline in some of those costs, but you need to be thinking about others. So you think of travel, meals, and entertainment. Well, we're not doing that anymore. But slash, I'm going to say slash where you can, because that is the notion when you're in a crisis. Save the money. So wages typically make up one of the largest expense categories for businesses. And naturally, in a downturn, if you need to make an immediate impact on your bottom line to ensure long-term stability, then some reductions are likely necessary. But the goal in this situation is ensuring that the company is around for the long term, as you want your employees to have a job to come back to. The 75% wage subsidy that was announced on Monday will support many businesses as they look at their workforce, but some may not qualify for the timing. So workforce overall, or people, your employees may still be a concern. So when it comes to employees, I just want to put a caveat in here that I am not an expert when it comes to HR management, nor a legal expert. So I would just suggest that you do speak with your legal counsel or your HR teams if you have one. But you would want to consider temporary layoffs. So it's usually a 13-week period. If you have a benefits plan, you would keep your employees on this. It means that you're able to bring them off. Your employees will be able to get EI. The goal is to, again, big impact, reduce expenses so that the company can survive. You can consider permanent layoffs, and we say right-sizing the organization. So I have many clients who have seen this as an opportunity to make sure that they're keeping the right talent that they need moving forward. You can reduce contract labor. So again, this is a very common strategy, and so any of the work that your contract labor was performing, can you then give it to full-time employees who may not be at full capacity, thereby reducing some of your cost. A lot of businesses are looking at their total compensation structure, from owners to managers to their full workforce. They're offering reduced work weeks, voluntary leave without pay. Some of them are taking advantage of the work sharing arrangements, which the government has increased. And some of them are looking at doing, straight line reductions across their staff. So for example, everyone is going to take a 25% pay cut so that we don't have to terminate anyone. And all of these options are still on the table. The next thing that I wrote is just considering accessing contingent labor pools. So virtual CFO, virtual HR, there's in-house legal counsel. Sometimes hiring consultants to do a piece of the work is sometimes cheaper than having full-time people in place, or engaging, I'm going to say, true experts and stuff in order to do the work. So basically having them join as a member of your team. Other considerations I think that are still on the table is business owners should be understanding their business interruption insurance. Obviously, this became a big issue in the SARS outbreak. I think it's still an option to be checking in with your insurance to make sure, to see if it is an option. We have companies and clients right now who are owed money by the government in their SHRED filings, HST, and some of the corporate taxes that may have been overpaid because of installment payments. So we would ask companies to try to accelerate those payments. If you have non-essential assets, look at selling them. So I gave the example before of excess inventory or obsolete inventory. So whatever you can sell, I'd be doing that. And in the long term, I think it's just a matter of looking at other functions that you might be able to outsource. And I think we're all going to be looking at different ways that we could be running our companies now that, you know, we're going through this. So what else can we do? So I know there's been some businesses that have looked at, you know, do we keep manufacturing in-house, or should we be outsourcing it? Third-party warehousing, again, contingent labor could also be another option. Now, we all need access to capital, especially now. And the first stage of managing your cash flow is really speaking to your commercial banker, so your financial institution. We've seen some really great stuff, and obviously there's a lot of stimulus that still needs to be worked through the system. But the first step is to speak with your commercial lenders, ask for that increase in the line of credit. I've seen several clients already get it. Some banks are giving an automatic almost 10% increase in the line, but it varies by bank. It obviously varies based on your credit rating. Most of the banks are postponing the principal payments on their loans, and they're definitely open to new business. So I had quite a few business owners reach out to me, especially sole proprietors who said that they didn't have a line of credit in place. So again, you want to be talking to your commercial banker. You can apply directly with BDC. So they have a small business loan up to $100,000 that you can apply for online. Again, they're postponing principal payments on that for 6 months. It's typically a 5-year working capital loan. They provide additional financing to support businesses, working capital. Maybe you're interested in doing an acquisition right now. They do purchase order financing as well. So, and we'll get into the subsidies in a minute, but I think it's important that you're obviously looking at what BDC can do for your business. You want to take advantage of other financing options. So some people may forget that there's a lot of kind of alternative ways to get capital, and some companies will say that they want to, you know, they're going to buy a piece of equipment, but there's the ability to have that financed. So again, I would just say be open-minded and try to explore all options as you're trying to decrease your cash burn. The alternative capital lenders, so a lot of companies will turn to factoring their receivables, and at the simplest, this is really you're selling your receivables to a third party at a discount. So they need to earn a percentage, and then they're in charge of trying to collect those receivables from your customers. So again, it's when you need cash immediately. There's a lot of you know, there's a lot of background obviously that goes into that. They have to make sure that, you know, they stand a good chance of collecting those receivables. There's also, BDC does purchase order financing. They have a long queue, so there's alternative lenders that also do purchase order financing as well. And there's debt and equity alternatives as well. And I know that's a little bit harder to come by at the moment, but there are still options out there for the right companies. So as of April 2nd, the government has passed a $107 billion aid package, and will seek to pass another $71 billion next week in stimulus and tax deferrals. So this is a very fluid situation with uncertainty around the financing, but it's important that you understand what is available, and finally that you're really taking advantage of the stimulus that the government has announced. So the first one is really this $40 billion federally guaranteed loans for small and medium-sized enterprise, and they call it the Business Credit Availability Program. So they've earmarked $20 million that will be but will flow really through the EDC, so Export Development Canada. And the EDC will be helping to guarantee operating cash flow loans with financial institutions. And they'll be able to do that up to 6.25 million. So their percentage will be 5 million, and then the banks will do the remainder. They'll be doing this with domestic companies as well as companies that are exporting. BDC has a co-lending program in place, and again, they have access to 20 billion in funding. So the terms are pretty similar to the EDC one. So 80% would be BDC and 20% would be the financial institution. BDC is saying on their site that it's commercial interest rates, and so far what we've seen with the rates, they've been more than fair, and they're looking at up to a 10-year repayment period, which would be pretty incredible for some of these businesses. The 40 billion under these federal guarantee loans, it really will be administered by the financial institutions, so your commercial banks, for both of these programs. So companies could basically get up to 12.5 million by blending these two offerings. Now, the full rollout of this program, the government said that it would basically take them around 3 weeks after their announcement on March 27th. So we're still trying to see how that will play out. But as part of that 40 billion, on March 13th, they had already announced, or 16th, they had already announced support through the BDC and EDC. So there's already access to capital that's been available, and I know many of our clients and likely most of you have already tapped in or tried to tap into some of this funding. So for example, BDC is offering low interest loans up to 2 million for businesses that were generating revenue in the past 24 months. The key to any of the subsidies that we've seen so far is that your company really had to have been, I call it bankable, before COVID-19. And what bankable means is that you weren't in breach of your covenants leading up to COVID-19. And if you were, because we know that there's definitely companies out there that have been riding the line, so long as your commercial lender will waive those covenants, and they do in a lot of cases, then you would be eligible. So when I was talking about favorable rates before, this loan, when we were originally speaking with them, the interest rate would likely fall in around 3.5%. Again, 6-month postponement. This one in particular, they're talking about a 3-year term. And again, they were looking for what is that 6-month COVID-19 impact on your company. The next announcement that the government made was a $40,000 federally guaranteed loan for small businesses and not-for-profits. And again, this was going to be administered through the EDC and the financial institutions. And overall, it was basically a $25 billion stimulus that the government was injecting. So again, it's for organizations that have payroll 50,000 to 1 million. In 2019, and there's no percentage of decline in revenues that were announced here. It's just you experienced a decline. The loans are interest-free. If you pay off the loan before December 31st, 2022, 25% of that loan will be forgiven. So for all businesses, again, you would need to contact your financial institution for details on how to apply for that. The government has also announced $85 billion in tax deferrals for businesses. So you can defer your income tax payments with anything that was due between March 18th to September 2020. Then the payment will be due on September 1st. They've also agreed to defer your GST, HST, and custom duties to June 30th, 2020. During the deferral period, there'll be no interest or penalties being assessed. They introduced a 3-month, 10% temporary wage subsidy for employers. So this was a subsidy that will equate to approximately, well, just under $1 billion. They made it retroactive to March 15th, and it's available to June 30th. This is the subsidy that has maximums to it. So per employee, you can claim $1,375, and then there's a $25,000 limit per employer. This is where you can, it's 10% based on your source deductions, and just the income tax amount. So you cannot claim it on the CPP and EI. And I think with any of the subsidies, I just want to state that they are taxable. So you're going to get this money, but you will basically include it in as a revenue. So the government obviously needs to recoup the cost. They've increased their EI work sharing program, so the eligibility used to be 38 weeks, and now it's 78 weeks, and this is just where workers who agree to a reduced work hour are able to again extend their EI eligibility. So a lot of companies are taking advantage of this. So this one here, the 75% Canada Emergency Wage Subsidy, 71 billion in savings. So this was the announcement that was made on this past Monday, March 30th. And basically, most companies and organizations can take advantage of it. So other than public bodies, so governments, crown corporations, the criteria is that you need to show a 30% decrease in your gross revenue measured against the same period last year. And I've shown the eligibility periods on the left. You can apply for this subsidy directly on your business account, your CRA portal on the CRA website. And they're encouraging all businesses to ensure that they are set up for direct deposit as that funding will be made directly into your account. The difference here is that employers will need to reapply for this wage subsidy on a monthly basis, and they need to attest that they actually meet that 30% decrease. So the subsidy is effective March 15th. And again, it's for 3 months. The max benefit for any employee is $847 per week. And again, it's 75% of the employee's pre-crisis remuneration. The funds are going to be available within 6 weeks, which is why I think it's still important for companies to take a look at their projections and really understand their cash flow management and whether they're able to bring back workers who they may have already laid off or if they need to make some temporary layoffs until they get the subsidy. So again, it's going to depend on your cash flow. The portal is actually going to be available in 3 weeks. To note here is that if you're claiming the 10% temporary wage subsidy on the source deductions, then you can't actually claim this one and the temporary wage subsidy concurrently. So it's either one or the other. Some of the key provincial subsidies that were announced. So EHT, they've increased the exemption level from 490,000 to 1 million and made that retroactive to 2020. And this is for employers with payroll less than 5 million. This is really critical as it really means that 90% of employers in Ontario will not be paying EHT this year. The extension levels will go back to normal, so to the 490,000 effective January 1st, 2021. There's been a deferral on the WSIB payments to August 31st, both the reporting and the premium, and no interest and penalties will accrue at this time. There's also been a deferral of provincially administered taxes, so beer and wine, fuel, tobacco. So the tax filings and the remittance deadlines, they remain unchanged. But again, there's that deferral in place. There is approximately a $45,000 savings for eligible businesses that construct, renovate, and acquire qualifying commercial or industrial buildings in designated areas. So again, I'd have to refer you to the website for more detail, but if you think you apply, then I'd be checking into that. And then overall, the Ontario government is increasing the OER, which is the Ontario electricity rebate. So hopefully we'll all see that shortly. So now that we're all on the same page, that one, we need a plan. even if it's a plan that seems to move day by day. And two, that there are things we can control in this situation as it relates to cash flow management. I wanted to leave you really with my third goal of the day, which I've labeled the turnaround plan. And really it starts with the premise that we were forced to shut down due to a health crisis. And this too shall pass. It's not something that hopefully will be long term. And if we look at China, I'm really hopeful that we'll be able to resume full market activity in the next couple of months, which is why I think it's so important to try our collective best to make informed decisions and to think about the long-term sustainability of our company. So I beg you to think long-term, understand that good cash management is necessary, and it's so incredibly important to have some safety nets built into your organizations. As owners, you also want to take some time to reflect on your business. Ask yourselves if there is anything that you could have done differently or areas that you would have definitely changed. Going through something like this, as we are, I can only imagine that we'll be all looking at our businesses differently. I definitely know, even from our standpoint, that we'll be doing certain things very different than what we did, say, a month ago. Finally, we know that this time is stressful and frustrating and complicated. So please build up your support system so that you're not making these decisions or doing this analysis on your own. And I'm going to end it with, we're all in it together, so let's support one another. And I said it, or I showed it earlier in the presentation. I mean, if you are a company that is doing well, please support the other businesses. Please get it. Support our local economy when you can. And don't hesitate to reach out, because we're definitely all in this together. I've listed some helpful links, and I believe Lynn is going to be sending around the presentation for everyone, but obviously starting with the Government of Canada and just where to access resources, some of the BDC links. And Welch LLP actually has a lot of really great resources, and we try to do a summary of all the subsidies and the announcements, and hopefully some more common language that you might find helpful. So with that, I'll hand it back to Su-Ling.
I'm going to jump in here for a moment and say, first of all, Candace, thank you so much. We'll give you a couple of minutes to rest your voice until we get into the Q&A section. But thank you again for sharing this wealth of information with everyone on our webinar today. I'm sure you've given people a lot of practical tips that they can expect to the business and really hopefully make a difference during this crisis phase. We do have a little thank you gift coming for you. I don't know if Su-Ling has one nearby that she can flash, because we really do have them. We'll get it to you at some point. I do want to very quickly let everyone know about some of the other upcoming webinars that we have. A lot of them touch on some of the items that Candace mentioned today. On Tuesday, April 7th, we are going to have the great folks from Cowan Insurance Group come and talk about all these different business insurance programs and how COVID-19 has affected everybody's coverage and what you can do about it. That one I think is going to be extremely popular. On April the 9th, we're doing a webinar called The Art of Building Resilience with Terry Lupovsky, who is a leadership coach. Everybody is needing a little time right now to think about how to become more resilient. And I think Candace was quite right when she said that, you know, if we're not adaptable, we're not agile, we're not resilient, we're not going to be able to come out of this well. So I think Terry's webinar is going to be outstanding. On April 14th, one of Candace's colleagues, Jim McConnery, is from Welch LLP, is going to take a more in-depth look at the different government assistance programs and unpack them a little bit for everybody and share some greater details. So we're looking forward to that. April 16th, we're going to have a webinar given by IHR Advisory Services. They are going to talk about practical guidance for HR issues in the face of COVID-19. On the 21st, we're going to have Kingsford Consulting Group do a seminar on how to lead a virtual team. So this is not about the technology side of virtual teams. This is how to lead your team, your people, how to get them engaged, how to get them focused, and how to get them inspired to keep your business moving forward. April 23rd, we're having Vision to Voice Communications, do something on internal communications and keeping your staff engaged. And April 28th, we're going to have the 5 steps of disaster recovery presented by Stratford managers. And on the 30th, I'm quite excited about this one. We're going to take a little pause and do an inspirational webinar. And right at the moment, we have confirmed Steve Cody of Rectify, who is a great leader in the business community, and Carla Briones from Freshie and Global Pet Foods and Carla Briones Consulting. Both of them have great stories to share. They're both leaders in our business community. And I think it's going to be very inspiring and fun to spend some time with these folks. So these are our upcoming webinars. They're all available on our website. And I encourage you to register. They are complimentary and they are open to everyone because we believe that we need to help everyone in the business community right now. So we have some time left now for some Q&As. I would imagine that there are lots of people who have questions for Candace. So is there anyone who would like to get started right away? Who's got a question for us today? You can either put your hand up or you can put a group chat. Jazz, you have a question for Candace?
Yes.
Celine, can you unmute everybody?
They can unmute themselves, Lynn, if they want to speak.
Oh, okay, lovely.
Okay, can you guys hear me?
We can,
We
Jazz.
can.
Excellent, perfect. Now, I have a question. It's like regarding being a self-employed. I don't have any employees. My business has shut down because it's a service which is very close to 1 centimeters of the body, someone's body. So I had to do the physical distancing. Anyway, so to make the long story short, my question here is, because I have 0 wages coming in, am I eligible to go for the emergency wage subsidy, or do I have to go with the CERB? Candace,
Yes.
would you answering that one, or?
Yeah, because you're a small business, so my understanding is that you're eligible for that $40,000 small business loan. And then there's also support like on the individual side. So I really just tried to share the kind of the corporate support or the business support, but you would have access to that, like that $2,000 a month subsidy, right?
Okay, so you're saying I would not be eligible to the 75%, like to show the period of March, April, and May that is less than 30%, so I don't qualify for that subsidy. You're saying it's mostly going to be the $2,000 a month that I would be eligible for, as well as the $2,000 loan,
So,
even though I don't have any employees.
I think, yeah, to be honest, I'm not 100% sure. So you have a corporation, you have a sole proprietorship?
I don't,
Corporation.
it's not incorporated, and it's no.
Yeah.
Candace, I'm
Yes.
wondering if this would be a question that maybe Jim would be better equipped to answer.
It might be. It's just that it's so new and we're still trying to go through it and they still haven't announced everything. So, I mean, if I go back to it, I mean, they say individuals absolutely are included in it. So you may, and obviously you'd be, it's decreased because you have 0 revenue coming in. Yeah, there's a lot of, I think there's other things that they're looking at, right? So it's how you take your income, whether you're taking a salary, if you're taking draws. So there's a little bit more to it. If you want to send me an email after, I can definitely answer your question. It's just that it's a little bit fluid right now. And to be honest, a lot of the stuff that is being announced, we're still trying to wrap our head around it.
I totally agree.
Yeah. And obviously all business owners are in the same spot. So I know it's really frustrating for many of us.
Jazz, I'll make sure that you have Candace's email address so that you can reach out to her. We have a question from Anand, and they're wondering about wage subsidies for new businesses. They started a new business in July of 2019.
So July of 2019. So again, when the government is looking at this, and it's included in one of my links, they haven't come out to say really how they're going to support. So if we're talking about like the 75% Canada wage subsidy, they haven't really, we don't know yet how they're going to calculate that. But again, you're a new business, you have access to that 40,000 SME subsidy.
Adam Herda also has a question. He would like to know, do employers have to pay the remaining 25% of the $58,700 salary, or can a company just pay the 75% or $44,000 subsidized by the government?
Yeah, so I think the goal based on what they said is that they'd like employers to be able to top it up, but it's not necessary because they know that many employers won't be able to do that. I think ultimately the goal is that, you know, they'd like people to have more guarantee that they have an income, and putting them on the EI system is not necessarily the solution. This is definitely a big economic aid for all businesses and for all workers. So I mean, if you can basically guarantee them 75% of their wage, they'd be most of them would be much better off than subscribing to EI. So they would like employers to be doing it. We don't know how that would be enforced, but if you have the financial means, I mean, the expectation is that you would try to top up, but at this point, I don't think that it's necessary.
And for everyone who is wondering about these government assistance packages, I just want to remind you that on the 14th, Jim McConnery from Welch LLP will be unpacking these packages a little bit more, in a more detailed fashion. They have to be studied, they have to be looked at, and they have to be completely understood before the contents are communicated properly. So I invite you to join us next week for that one.
Lynn, can we also mention, I know Candace, you have made resources available on your website, and that we have as well at the Board of Trade, and we are continuing to bring resources in from our members, from our Ontario and Canadian Association and other chambers as well, to try and make that as robust as possible.
Yeah, that's good. There's a lot of resources out there, and I see on the chat, and a couple of you shared the Government of Canada's a resource page. I mean, it's all excellent. And at the end of the day, I think where the complication sits is how do you implement it? And I think that's the frustration with many business owners right now is how does it work and how fast can we get the funding? So ultimately, I'm going to say that it all comes back to you need to look at your finances and your cash flow, and you're still going to make those decisions based on the timing. So when the government announces some of these subsidies and they say that it's still going to be 3 weeks or it's still going to be 6 weeks until they can get that financing into your hand, all those still have to be taken into account in how you run your business. So it's really hard, but like I said, I think, you know, we're all in the same boat. Even myself, I run a small business. We're in the same boat trying to figure out if we qualify, if we don't qualify. And it's not just, you know, when we're looking at the 75%, I think ultimately I'm hoping that we'd still see some more changes because many businesses, especially if you're a seasonal business, you won't necessarily see a 30% decrease in opportunities right now or revenues right now, but you'll see the impact over the next year for sure.
Very good.
Candace, we have another question from Amanda.
Yeah.
And Amanda, you can unmute your line if you want to speak with Candace directly, but her question is, we are incorporated, 2 directors owning 50% of the shares. We are employees of the corporation. We had to shut down our business because it's a clinic, so 0 revenue since March 17th. And she's asking if they should apply for the $2,000 subsidy or the wage subsidy.
Yeah, so you're always going to go for the biggest impact, right? So 75% of your wages are most likely a larger impact. So I would say that's what you're going to apply for. But again, I'd need to look, because I actually think that you might qualify for both.
So are we
again,
able
please
to take
email
both?
me.
I was just curious because I thought they said you couldn't take both. You had to have
you
either
can't,
one or
so
the
the
other.
ones that you can't take both on are the 10% on the source deductions. So the 2,000 is a personal, and like I said, I haven't really studied too much on the personal side. But the 2,000 limit a month, that's a personal benefit. The 2 that we are talking about is the 10% temporary wage. I just want to make sure that I have the right title of it. So it's called a 10% temporary wage subsidy for employers, and that's on the income tax portion of your source deduction. The next one is the 75%, and that's your total remuneration. So that's your salary. So you can't have one or the other. So for example, you know, companies that do not qualify for the 75%, they may still qualify for the 10% reduction on their income tax source deduction remittance.
Now, I have a question. How is it that we go about, is this through our accountant that we would be applying for these subsidies?
So a lot of the subsidies, so like the 75% subsidy they just announced, it's going to be through your CRA portal. So directly online with CRA, that's how you go about that one. The 10% subsidy, that is, that's directly through you. So as you're filing as you're remitting your source deductions, you're going to decrease that amount by 10%. And your accountant can help you work through that. But basically, you're going to look at the amount of income tax that you would otherwise be reporting or remitting to the government, and you would withhold 10% of that. And it's important that all companies have really clean and accurate records, because all of this information is going to be auditable. We've heard multiple times that a lot of the stimulus is based on the honor system. And that's why in a lot of cases, even for some of my clients, I'm like, just hold off. We want to make sure that we're doing this right, that we're eligible. Because even if you think of that subsidy that was announced on Monday with the 75%, there's going to be severe fines, and they're even talking about fraud charges if they see companies that are taking advantage of the program.
We have one more question from Jerome Paulsine, and he's wondering, can you take the 10% the first month and the 75% for month 2 and 3?
Yes, you just can't take them concurrently. So there might be, so with the 75%, you have to reapply for that subsidy on a monthly basis. So for example, in March, if you can't demonstrate that your revenues have been lower by 30%, then you would take the 10% wage subsidy on your source deductions. But the next month, say in April, in May, you do qualify. Well, you would take the 75%. Again, it's a much larger subsidy. You're always going to try to access, I think, as much funding as you can.
Candace, I'm the first month, obviously March, we're going to be fine. We're going to actually have an increase in sales, but we're going to take a major hit in April and May. Yeah. So that 10%, is it automatically available without having any, again, decrease in sales?
That's right.
Okay, good.
That's right.
Do we have any other questions for Candace? Chantel has one.
Yeah. Hi, Candace. Chantel from the Ottawa Board of Trade. And I know Suling's going to ask me this question in probably about 10 minutes, so I'm going to ask you. The Ottawa Board of Trade does we do deferred revenue. Our memberships are sold over a 12-month period. So as of March, we will not see a 30% drop in membership because they've been deferred over the last 12 months. Where we will see it in probably is in the next 6 months to a year. How does that work in terms of the 75% wage subsidies and the qualifications?
Yeah, so unfortunately, as it's currently written, you wouldn't qualify, right? So we looked at this on Monday, even before they made the announcement, and we said, how are they going to do this? And they really did say, what did you do last year? What did you do this year? And you're going to compare it, and that's it. But they know that that doesn't cover every example. So, I mean, they specifically came out and said that they would take a look at associations and not-for-profits and see what they can do. They might come back at another point and take a look at, like I said, like seasonal workers, and because I mean, even if, I'll give you the example with my business, like we do mergers and acquisitions, and a lot of our deals were put on hold. So it depends on when we're closing deals that are really going to impact us. So we likely won't see too much of an impact in the next 3 months, but, I could see a 50% impact by the end of the year or more. So like, we don't know. And I think that is the struggle, but the government is trying to react pretty quickly. Everyone is obviously frustrated, but I get it. Like, they're all trying to do their best, which is fantastic, but they needed to get a measure in place so it would be simple for businesses. So looking at last year to this year works.
Candace, if I could just mention another thing that came up in our SME Council yesterday is revenues versus receivables. So you may have had good sales, right, in the beginning of March or something like that, but what's your ability to actually collect on those? And so I think some of the things you've talked about is reaching out to your customers right away to do a probability report is probably a good idea.
Yeah, but even that wouldn't be impacted as it's defined now, Suling, because if you're not able to collect those receivables, you're not reversing your revenue, you're recording a bad debt. Right. So they specifically said that you have to follow your standard accounting principles and rules. Right. So you're not going to change your accounting for certain things. And I think that's why, they start talking about fraud and making sure that you're online and not online, on side with, the best reporting practices, because it would be really hard. And there might be companies out there that will do write-offs and they'll be like, well, I'm just going to reduce my sales. But that doesn't follow accounting principles. So again, I think, they still have more work to do on it.
Yeah. Okay. Thank you. Okay, Lynn, I think is that everything on our...
I think it's time to wrap up. We've answered all the questions that were in the chat. Okay. Candace, we cannot thank you enough for sharing this expertise with everybody today. We will be distributing the copy of Candace's slides, and it includes her contact information if you want to reach out to her with further questions. She has very kindly agreed to do that for everybody. Yeah. And we will be distributing a copy of the recording of the webinar as well.
Good, good. So Candace, I hope you've been able to follow the chat because you're getting many accolades for your presentation.
Yes, yes,
Thanks,
it's nice.
Everyone.
All right.
I just actually brought it upside, so I was missing most of it earlier.
Okay. We hope to see everyone again soon. Stay safe. Yes. Stay safe, and we'll see you again soon. Thank you.
Bye, everybody.
Thanks,
thank you.
Bye-bye.